Hello guys, uh, my name is Musa, and today I'll be sharing a video on how to use technical analysis in forex trading or in trading. So as you can see, I have Euro AUD. Euro AUD is an exotic pair, and exotic pairs are volatile. So what you want to do is to start from a higher time frame, right? Higher time frame. You would want to zoom out and see the overall momentum of the market. So what I see on my standpoint of view is I see that the market is in a is in this type is ranging inside this channel, right? So yes, it's a descending type pattern. So normally descending type patterns break to the upside. So what you'd want to do on the higher time frame is to draw your overall momentum of the trend, and place your zones, your key levels where the market usually reverses, and this is where the market usually reverses because let me extend this. So the market respects this zone here because the market tends to reverse and hit this zone. As you can see here, it broke out and retested, then shot back down, and here it reversed. Here it broke out to retest twice, here and here, before moving upwards, and here it played around and it failed to maintain being on the upside above this zone. So also wanna I recommend that you draw at least up to 4 zones or 4 key levels where the market reverses a lot, right? So this is my third zone. Yes. And now I'm gonna place my last zone. So guys, do understand that the market is not perfect, and you won't always find perfect places where you can place your zones or draw your trend lines. So follow the market and take what the market uses. So after you draw your zones and your trend lines, your overall momentum of your trade, you wanna move to the 4-hour time frame. And on 4-hour time frame, we use 4-hour time frame to identify chart patterns. Basically it's a trends in trends thing. So I'm gonna analyze what the market gave me, and I'm gonna analyze what the market is giving me. So guys, as you can see, I see that the market gave me this nice downward momentum, So I'm gonna paste my other here. Place it here. So yes, this is a descending type pattern, and what the market is giving me right now. I see that the market is giving me an upward momentum. So the reason being the market giving me this upward momentum is because this was a descending type pattern, and I said normally descending type patterns break to the upside and continue their way up. So let's move to the 1 hour time frame. So on the 1 hour time frame, I see that the market has made a power move to the upside, and meaning that it's playing around this zone and it's touching my trend line, my upper trend line, and it's also touching my overall trend line. As you can see on the daily time frame, you see this wick, and normally when you see large wick rejections like these, it simply means that the market has a higher chance of reversing. As you can see here, there's a wick. There are also some wicks here. And another thing is that the market is now on its third touch. So this was our first touch here. This was our second touch. Yeah. Okay, let me fix this. Okay, color to blue. What did I do? Okay, let's continue. Okay, it's fine. This was my second touch, and now the market is giving me my third touch. And normally it means that when the market gives you a third touch, there's a high chance that the market might reverse. And another reversal tip is to spot reversals. It's either by weak rejections and power move to the market structure, meaning that, okay, so since this is our support right here, our resistance, the market made a power move, as you can see, a power move to this zone and touching the trend line, meaning that it will simply has a higher chance of going down. As you can see here, let me zoom in here, it's a power move to this zone, it reversed. Here, this power move to our zone, it reversed. And also here, this power move resulting in a reversal. So when you analyze the market, you would wanna take advantage of what the market gives you and not control the market, meaning that don't decide what the market should do. The market doesn't care about your analysis. So what you would want to do is to follow the market and see what it gives. So when you move to the 1 hour time frame, you want to see a confirmation, right? And how we would seize the opportunity for a sell. And obviously for me, I use 3 or more confluences or 3 or more confirmations. So my first confirmation is that it touched my overall trend line, downward diagonal resistance of the daily time frame, and it's touching my this diagonal resistance of the 4-hour time frame. And my third confirmation is that it's a power move to the zone. So we would obviously try to find some type of pattern for us to enter our trade. So what I see is this is the on the market. Market is giving me this upward move. And basically, when you analyze, you would want to have at least a maximum of 4 trends. First trend being the overall momentum of the market. Second trend, your 4-hour time frame trend, what the market gave you and what the market is giving you. And the fourth trend would be on the 1-hour time frame. Then you would enter your trades on the 30 minutes and 15 minutes. So currently I'm on the 30-minute time frame, and on the 30-minute time frame, what you would want to look for is reversal patterns. For example, one of a reversal pattern is a head and shoulders. Another one is a double top or a double bottom. So currently what I see is the market so yes, what I see is that the market is giving me a head and shoulders. Normally guys, as I said, you won't have perfect, your analysis, the market won't be perfect for your setup. So sometimes you have to take what the market gives you, right? So what I see on my standpoint of view is that I'm seeing this as a head and shoulders formation, resulting in the breakout. Should it retest, we would further look forward. We would then have confirmation for entering our trade. So currently the market, today is a Saturday and the market is closed. So hopefully when the market opens on a Monday, it may form our head and shoulders setup. So where you would enter is you would wait for the market to first complete your head and shoulders. It's gonna break to the upside, come back to retest before actually moving to the downside. And how would you okay, another thing you would look at is your risk to reward ratio. I recommend that your risk to reward ratio should be 1:2. And most people get stopped out by the market because they put their stop loss in terms of how much they want to lose and not placing it where it invalidates your trading setup. So if the market were to continue breaking this trend line go up for a retest, and you find that the market is failing to retest and move back down, hence the market breaks out, say it breaks out, right? Or the market sometimes can stop people out, so you would want to place your stop loss where it invalidates your trading setup. Most people will place their stop loss around 30 pips or 20 pips or less, not knowing that the market might form a double top formation. As you can see here, it might form this double top before it actually moves to the downside, and then people complain saying that forex is a scam. It's not. The problem is where you place your stop loss. So you would place your stop loss where it invalidates your trading setup. So if the market creates our double top, it's gonna create some wicks here, as you can see, these small wicks, before actually moving back down, or it might form our head and shoulders. So you would want to place your stop loss above above this line here, or you would place your stop loss just above these wicks, so that the market, if the market creates some wicks, it will stop people out before going down. So you'd want to place your stop loss where it invalidates your trading setup, and your overall gain on this is a risk to reward ratio of 1:3.8, and that's good. So if you would have lost 3 trades consistently, this trade would cover up your losses. So you would want to place your stop loss where it invalidates your trading setup. And the last thing is draw at least a maximum of 4 trends or 4 channels. The first channel, second channel, 1 hour channels, my third one, and the overall, to make the most out of trading. So guys, this is it from me, and thank you for watching.